Va pas falloir stresser.
Mais qui stresse, frérot?
Mais non, mais montre-moi la base, John.
Ah, tu veux là? Ben non, je peux pas te montrer. Après, tu vas connaître toutes mes astuces.
Envoie-moi la base, les différents points. Je veux voir ta trendline pour une fois.
Ah, mais les gars, ils sont en train de faire une analyse à deux comme s'il n'y avait pas de stream qui était censé commencer.
Mais vas-y,
Euh,
let's go, avance.
hello, everyone. Hope you're doing fine. So I'm live with Pierre. I know that John is also listening to us. So I hope you had an amazing 2023 end of the year party, that you were able to, have fun before this week, because now is a new year, and we're gonna start and we're gonna crush everything. And we have prepared something for you. It's the first live stream of the year 2023. So I'm with Pierre. Hello, Pierre.
Hi. Can you share your screen?
Is
That
it
way we
shared or
can
no?
see.
I think I just shared it before.
I think it's shared on Twitch, but it isn't on Discord.
Give me a second. I am sharing my screen, huh?
All right.
Can you see
There it
it?
is. Okay, I
You
found
have
it.
it? Okay, you found it. Amazing.
Everything's nice.
Okay, so yeah, we were saying it's going to be a very, very interesting live stream because it's the first one of the year. We decided with Pierre that it would be interesting to go back a bit to see how the past year went through, what we basically did, what's the general bias that we have on the market, and delete everything from our charts and make sure that we're starting from scratch and have like a very clean chart and be able to have a trading plan at the end of the session. So let's start. Okay. So
Let's
just
go.
before we deep dive into the session, just take a minute to read this legal disclaimer. I think it's important, especially if you're not familiar with trading, if you haven't got any strategy that is set in stone with specific rules that you follow and everything, and that you have a proper risk management. I would advise you to read this. We are not providing any kind of financial advice. This is only for educational purposes. We are providing you with the levels that we feel we should be trading. Basically, instead of just trading Pierre and me, we decided that we want to share this analysis with as many people as we can get, so we can educate people on how to trade and yeah, make it make it as educational as possible. So if you don't have a proper risk management, if you don't have any experience in trading, I would advise you to start with paper money to make sure that you're not exposing yourself to any kind of risks. So yeah, take a minute, read this, and then we can go to the agenda. So what are we going to do? Delete all the levels, start from scratch, have a quick analysis on the ES. So the ES is the S&P 500 futures. Okay. We're going to then formulate a trading plan once we have this 360 view basically for the week to come. Actually, maybe even further than the week to come, because it's going to be like a yearly analysis. So you're going to have, it's going to be very, very interesting. You're going to see. And at the end, a question and answer session. If you have any questions, just feel free to ask them, and we're here to answer them, whether it's Pierre or me. Okay?
Let's go.
Let's go. Let's deep dive. So tell me, can you see my screen? Do you see the charts? Is everything is okay?
Yeah, I can.
Yeah? Okay.
Yeah.
So you see all this ugly thing right there? Yeah. Delete
yes.
everything. That was the last stream that we had was on the 18th of December, and we're gonna remove everything, all the drawings, and I think everything is gone now. Yeah, that is so sad. Okay, so as usual, the idea is to start with a higher time frame perspective. Okay, so you're on the monthly time frame right there, and what strikes you really is that basically we're just been dropping. Okay, that was the start of the year. Right there.
Heavily.
Yeah, you see, we started this year, January 2022, and basically we consolidated for 3 months, and then we dropped another consolidation. You see, actually on the monthly level, it's really interesting because you see that you have like maybe 2 months of of maybe a rally, price action rally, and then another dump. And the dumps are really bigger than those mini rallies, huh? You see every time it's like you have a bit of a push up and then you have one big engulfing candle, a second one, a third one, and you drop like really heavily. Here the same thing happened. You have one green candle right there, and then you drop again, and now we're basically at those lows. So the question is, did we hit a bottom, right? This is what we want to know. Like, are we heading towards lower levels, or is there now more probability for us to go higher? So we're going to try to answer this question with some basic analysis. So let's start by mapping, as usual, the monthly levels. So I'm going to map this one right there. Monthly right there. We're going to have another monthly that is right there. Okay. So first thing that you can see actually is that here on the monthly level, you have like a big drop between 23 and 45K. You had like a big drop in only 3 months. Okay, in only 3 months of price action, you had minus 50% of Bitcoin price action. It's actually a lot. It coincides, of course, with the global economy in the world, with the war in Ukraine and everything. So it's not just Bitcoin, but in 3 months only, we dropped really heavily. And you can see that on the monthly level, we have nothing right there. Huh? It's like you could go back up super fast. Okay, so
I think that was previous of the Ukraine war.
That was before?
Yeah.
When did it start this year? The beginning of the year?
Yeah, it did.
Yeah.
Yeah, it did. But you have like 1, 2, 3, 4, 5,
Yeah.
6, 7 months after the 3 months. So
I agree. You have all this, basically repercussion of what we see, because this is not just on the Bitcoin. You have this also happening on the other markets. So it's interesting.
Yeah, on the global market.
Exactly.
You could put the yearly open too.
The yearly open, that's a good idea. You're right. Let me do that. Oops, sorry. Okay. So yearly open, we would go here, but I mean it's so far away. It's aligned with this monthly actually.
So this is the close and the open is down there.
Yeah. Let's put it right there. How are we gonna call it? We're gonna call it yearly open. Okay. So.
Notice
it's not even a yearly open. This is a yearly level.
I know. I was saying this is a yearly level, and the open is down there.
Yeah,
at
the
20K,
right
at 16.
Exactly. Quite a drop in 1 year.
Oh yeah.
Look at that. Who would have thought?
And this is the first red yearly candle in a while.
That's a lot. I mean, yeah, but keep in mind something. We only have price action since the 2018. Okay.
So you had that's 3 years in a row that we have a green candle.
Definitely.
On the yearly.
Definitely. This is a big red flag. In my point of view, and even on the log scale. Okay, on the log scale, it's not as big as the pump we had from here, but I mean it's starting to look like something scary. If you go on the monthly chart. So on the log scale, you actually, so for people who don't know, log scale is basically you're taking into account the percentages more than the values, okay? Because just to say it, a move between 65,000 and 45,000 is not the same as a move between 3,000 and 10,000, okay? One of them is multiplied by 3 and the other one is only a 20% drop. Okay, and unfortunately, if you don't put the log scale, you have the feeling that this is where there's action and here there was no volatility. And it's completely wrong. It's actually quite the opposite. All the action happened before, and now we're seeing that the Bitcoin is having less volatility than before. Okay, so anyway, this is the log chart. On the log chart, you can see that we're still going up, but we did take those lows right there. Okay, we dropped, we have another low, we made a lower high, and we took the lows again. So now even on the monthly chart, you can say that, you're on a bearish trend. Bitcoin is heading lower just from a monthly perspective market structure. Yeah. Did we finish marking our monthly levels? Not really. You wanted me to mark the yearly open. Sorry, I'm gonna put it in. So it's here. It'd be interesting to see what happened this year. How am I going to put it? What
I put it in gold, in big bold gold.
Okay, let's do the same. So I'm gonna put it like that. I'm gonna call it yearly open. Honestly, I don't really know the respect of this level, whether I haven't backtested anything.
Especially on the crypto.
Yeah. But I would be very, very interested in knowing. I'm gonna put it in white, okay? Because I don't want to mix it with anything. I'm gonna put it in white. So we have a yearly open here. We have the monthly levels. Are we done with the monthly levels? To
the downside, no.
To the downside, we have here.
Yeah.
We have this one. That's the next one. Sorry. What would be the other one? We have, again, lower here. We have some support that is coming lower, okay? But look at the levels, huh? We're at 6,000. So, I mean, for people who have been following us for a while now, we already talked about the fact that you have like this gap here, right? Between where we are, should we drop? Should we see another sign of weakness in the chart and have another, 3 months in a row bearish trend? You could see the price actually drop pretty fast towards the 10K area, okay? We're not there yet, but you could see a 34-35% drop. That would not be at all surprising for me because of this swift move to the upside. And that's about it. Locally here, we don't have any monthly level as support. I mean, we've been creating levels and backtested them as resistance and then dropping, creating and this one hasn't been backtested, this one either. But I mean, if you go more locally, you will see that all the levels that we create and then we drop. So we're creating lots of resistance above us. So for me right now, if you look at it in this way, there is no sign of strength so far. Okay, let's go on the weekly level. So I'm just going to put everything in a chart. Okay, let's put everything here. Monthly. And let's go to the weekly levels. So, weekly levels. What do we have locally? So let's focus on this part here because this is where we are, and it's been since June. So here you have more than 6 months of price action, 7 months of price action. Okay, what are the levels that you should have in mind? You have this one right there, which is interesting because it really marks the top of all this range. If you were to analyze the way that we're going down, you have multiple ranges that have been created. Okay, on the weekly level, it's even more visible.
Pronounced,
you could even say that here you have like a mini consolidation before the drop, which is included inside of this bigger consolidation right there. Okay.
Yeah. If you are in log. I'm in log.
Oh, you're right.
Just so you know. Yeah.
Exactly. Okay. I mean, even outside of log, it seems that it's the thing. But actually, I prefer it in log because it shows really the percentage moves, the percentage volatility, and it shows you that actually everything that happened here, we're having the same kind of volatility, a bit lower though here. Okay, so you have this big range, okay, that we've been forming for the past 2 years, right? And we broke down from this range. Before we broke down, we had like this mini consolidation around the point of control at the time. We broke down from this mini consolidation area. We arrived here. As you can see here, there was a bit of friction. Something happened. If you dive deeper on the daily level, you're going to see it. So you had this thing here, okay? This could provide, should we start visiting this level to the upside, this could provide some kind of friction as well, some kind of resistance, but we're not there yet. And anyway, we had a consolidation, we dropped again, and now we're in this area of the chart where you can safely say that price is compacted between the top, which is $25,000, and the low, which is $15,000, okay? Before we leave this chart, for me, we are range bound. Before we leave, this range, we're completely range bound. There is no point in saying we're going to go lower or we're going to go higher. Right now, we're inside this range. And even this range, you can actually pull two different mini ranges inside of it, which is this one right there. Okay. I'm going to put it in different colors so you guys can see. The rectangle, let's put it in, let's put it in green. And this one right there. Okay. And I mean, just look at the respect just in terms of pure market structure and chart. We have nothing, no other indicators so far. Let me just remove the monthlies because it is not helping us. Up. Look at that. It's you had this range right there. Okay. For almost 6 months, you had a range. And then you drop, you create another range. And where do you go? What do you backtest? You backtest the basically the lows of the previous range. And you reject and you go lower. Okay. So really you have two different ranges here, but yeah, you could say that this is the whole part of this 6-month range that we've been in. Okay. And personally and locally, we're going to be focusing on this part because again, there's no point in thinking we're going to go to 25,000 when we're still at 16,000. But when you do this, you're able actually to divide the chart on multiple ranges and understand, okay, what is the next range that I want to trade? What is the next level? And what's the in-between that will provide very, very low resistance? I'm talking about this area right there. You can see it. I'm talking about this area right there. Okay. I mean, you do have the lows of the range, but they already provided some kind of resistance. Should we start getting acceptance here, this could be filled very fast. Okay. And you have here also a very low area of resistance just by checking the inefficiency areas. Okay, so let's keep on doing what we're doing, which is marking the weekly levels, or else we're going to stay 3 hours. So we had one weekly level that is here. Okay, I'm going to hide all those things because right now it's not helping us. You have another weekly level right there. Another one here. You see how many weekly levels we've been creating to the upside? It's crazy. Another one here. Look at that. Look at this one. It has been fun. It wasn't even back tested, and we had already like a small rejection. That's the closest one we have to the upside and to the downside. And even to the downside, we don't have any weekly level untapped. I mean, we created this one, okay? At this moment in time, we back tested, we went back up, and you're thinking, okay, let's go up. And what happened? You tried to reach the previous range, like I showed you. You get rejected by the lows of the previous range, and you go back down. So this weekly level is tapped for me. It provided a very, very nice reaction here. You can see it, huh? Here was an amazing reaction where you came here like almost to the dollar, okay? Like you had a drop from... How much was that? Yeah, 11% drop, and you stop where? To this weekly level. So it is a level, but for me, this level has been played already. Okay, so I wouldn't take a trade off of it alone. I would want to see multiple confluences. And so for the sake of the educational purposes only, I'm going to remove it from now. I just want to mark the levels that are untapped for a simple reason. You want to enter the best trades possible. If you start putting all the levels on your chart, first of all, you're not going to understand what's happening. It's going to be like super cluttered and overcrowded. And this is really, I mean, personally, when I see this, for me, it's analysis paralysis. Like you don't really understand what happens. And yeah, you want your chart to be the cleanest possible just to make sure you identify those best setups. So in terms of weekly, we have this one above us, this one above us. And then it's above 25,000, okay? Should we mark the levels above 25,000 or no, Pia? What do you think?
I think it'd be preferable to either just mark this one, right, at 31 maybe, but mostly down there.
Yeah. Yeah, because I mean, it might sound like it's not far away, but you're talking about an 80% rise, okay? And I really doubt we're going to have this in 1 week, especially with what we're seeing so far. So those levels should be fine. I don't even think we're going to hit this level, to be honest. So we should really focus now, if we had to do any kind of analysis, it's this range right there. And because of the global trend, try to understand what's the next level to the lower side. So I agree with you. Let's keep it simple.
Yeah.
So here is weekly levels. Okay. Let's close them. There's another one right there. Okay. I'm going to remove all those rectangles showing you basically the price ranges. So let's move on to the daily level. Okay. And you can see now that you start, the more you dive in, the more the market structure can help you to find those day trading or mini swing trades that can be very profitable, to be honest. So we have this previous range and we have this range here. So let's mark the daily levels that are directly around us. Okay, those are the ones that are immediately close to the current price action. You have one daily level right there. You have another pivot, which is right there. Another pivot, which is lower. I really like those two, yeah, because we're inside of them. It's kind of a natural range. This one was tapped. You can see it was tapped, rejected from it, and then it went back up. Okay, so I would not mark this one. Do we have another one? We have this one right there. Very, very nice level. Very nice level because of this here. You see it? You have here one
wick. Like this one.
Yeah, you have 1 wick. People entered longs here. Stop loss below here. They come back here. What do? Enter more longs. Stop loss here and here. So here you have you have stop losses basically. So you could really, like, this is one of the things Bitcoin loves to do. You could see something like this and then back up. You remove everybody, you take out everybody from the longs. This is a very nice daily. What's the next level that we have? Oh, we have this one, of course. We have this one, and I know that's lower, but those are like older levels. We have to go back to when? 2020, COVID year. COVID year. Not this one. It's here, I think, right? Yeah. 15,300. You have one daily level here. Look at that. This one was back tested. I mean, look at those levels. They're crazy. They're crazy. The respect of them. In the 8th of November 20, okay, you created, so it was 2 years ago? Yeah, 2 years ago. A bit more than 2 years ago. You created a level here, a pivot. You went up. You back tested it, like, really to the dollar. And because the previous, so you opened the candle here, you had, yeah, a 4% drop right into the thing. I love to see this kind of price action. It really shows you that those levels are really, really well respected. And then, and that's it. That's it on the lower side. We have nothing here, right? This is why I'm saying that the drop could be really, really, really harsh, because the next level that you have is here. You have one there, 10,000. And then you have one here. You could say that it's been tapped, honestly, but okay, let's mark it. Okay, that's scary. That's very scary. And let's put the weekly, because I think we missed the weekly levels, right? We did not put the weekly levels to the downside. Let me see. Yeah. We did not put the next weekly level, which is here. You have a weekly level right there. Another one here. Everything is tapped. You have one here that's very nice. One here, and then below. Wow. I mean, even this was so fast. That was the Corona drop, right? Yeah, that was the Corona drop. Yeah. Dropped super heavily. V-shaped recovery, something that almost never happened. You go down here, everybody bearish. Bam, you go back up. Okay. So we marked our levels. I'm just going to put them in the right order. Those are weeklies. And all those here are daily levels. And that's it. That's how you mark basically your high time frame pivots. or that's at least how we do it with Pierre. So what can we say? Well, first of all, here the only levels you can play with are daily levels, and you have one weekly that was just created at the end of the year. But before that, I mean, the only things that you have here are daily levels. Okay, but still, they can provide really nice nice setups. So let's now put some volume levels, because now we have market structure pivots, and now you want to add in a bit of volume, so you can have like really cool confluences of indicators. So we just said that we are in this range that's inside of this bigger range, and that's the previous range that we left from June. Okay, I'm going to show you again if I put the rectangles. So we left this range right there. Okay, we dropped, like you can see it pretty clearly. Let's go on the daily level. We dropped from this range, and then we formed another range right there. So automatically, what do you want to do? Fixed range pools. Yeah, you want to see the volume here, you want to see the volume here. Yeah, so let's start with this one above. Fixed range pool, very easy. You go here, you put towards here. Okay, of course it's going to take everything. Okay, so in 6 months, the biggest point of volume of transaction for 6 months has been around 19,176. Here, you can make sure that when we're going to visit this level here, there's going to be some kind of friction. Okay, it's not it's not a certainty. We can blast through it because we dropped super fast. We can blast through it. But here, lots of traders took the bad decision and longed here, hoping that it will actually go back up. And they've been underwater for almost 3 months now. And so when the price is going to go back up here, they want to get out and break even. So there is going to be a selling pressure. Okay, somebody who opens a long and wants to get out of his position, what does he do? He sells his position. So you know that there's going to be a selling friction around this area, supposedly. Now, is this going to be enough to reject from it? Nobody can tell. But this is already a point that you want to have marked on your chart. So let's mark it. That's the point of control of the previous range. And I'm going to call it the June range, so we understand. Okay, the value area low is very close to it. Okay, value area low. Don't hesitate to interrupt me, Pierre, if you see some other things, interesting things.
No, everything is perfect right now.
Yeah, I mean, obviously. So there's no modesty in this stream. No modesty whatsoever.
None whatsoever.
No. Okay. So those are our volume levels. So for those who don't know, the value area of a range, basically, is where most of the transaction has been happening in terms of volume. And you want to know, you want to have this information. Why? Because this shows you what are the levels that most of the players are interested in, even the big players, okay? Because what it basically says is that inside of the 6 month range, okay, 70% of the transaction happened between this level, 2700, and 18700, okay? Everything above and below, it's, so the rest, 30% of 6 months of price action, okay? But all the players played inside of this range. So you want to know that. You want to know that because, yeah, point of control, you know there's going to be a reaction. The value area low, look at how powerful this level was. How many times it hit it. Look at that. You hit the level, and you reject. Of course, you go deeper below it, but you almost never close 3 consecutive daily levels below the value area low, right?
Yeah.
So here, this level is very strong. And to the upside, look at that. Look at how well respected this level is. Here you go above it. You call this support resistance flip. Bam, here you try to get inside of it, so you actually do deviate inside of the range and then go back up. And once you break through it again, look at the respect of this level right there. So those levels are really, really important. They're high time frame levels. 6 month value area is a high time frame in my vocabulary at least. So you want to have them marked, okay? And we're gonna mark this as the value area of the June range. That's it. Okay. Let's see if with this and daily levels we have some kind of confluences. Yeah, we have one. We have one very interesting right there. The value area of the previous range, the June range, is completely aligned with this weekly level. So this already, you have two high time frame levels that are pretty close. You have here a major high in this downtrend. I can tell you from now that this level here is going to be a level I will trade. Most surely I'm going to trade that. So let's keep on going. We did the value area above. Let's do the value area below. I'm going to go into the 4 hours just to have something a bit. Okay, so let's include this little, this order block right there. Okay. Look at this respect, right? And here. I mean, those lines are really, really important. Value areas, super, super important part of our strategy. Value area high, and let's call it current range. Okay, so we are below this value area high current range. We are above the value area low. Every time we hit the value area low, there is a massive reaction. I mean, massive. There is a reaction at least, okay? And it's in matters of seconds because I was there, I was trading this. In matters of seconds, you go back up 1-2%. And if you're not quick enough here on the trigger, you miss the trade. Here, the same thing. You come, you hit it, and then you go back up, okay? Do we have any daily level?
Yeah, I missed the last one because it happened so quickly.
This one? Yeah, this one was super. And this one was so fast as well. So fast as well.
But the last one was like in 2 seconds of a time. Like it was crazy.
And the one we did yesterday, right? Yeah, it was the second. Remember this one? We went above it.
Yeah.
Took the highs and then go back.
It went like boom and go back.
Yeah. And I mean, if you're not prepared for those levels, if you don't know what to look for, you can very easily miss a trade because you're not fast enough. Oops, I'm just aligning everything. Okay, and then of course you want to have the point of control because this is where most of the transaction happen in this range. And we're talking about almost 3 months range now. Yeah. 8th of November. So November, December, January. Yeah. And in 4 days, this would be a 3 months range. Okay. And this is where we are inside. We're inside of this range right now. So those are the value area levels. Okay. We did hit the value area low twice. We went above the point of control, which is a good sign usually. At this moment in time, when you backtest and then you go back up, you could expect a move back to the value area high. But right now we're seeing some kind of a rejection. And we're going to explain to you why there's a rejection here and why we're dropping. It's very, very technical, but it's very understandable as well. Let me just extend this one here. Okay. Let's add on some daily levels. Do we have any kind of confluence? No, nothing. Yeah, you have the yearly open. That is also the daily level, but that's it. Okay, there's nothing. So once you did this, we're still on the high time frame level. Okay. You can add some Fibonacci levels, right? Fibonacci is a very, very cool tool as well. It's basically the retracement of a move. So the first Fibonacci level that you want to have in mind is ultimate low to the high of this range. Up, sorry, my bad. And here you want to have those two levels marked. And you can see the respect, okay? From this low to this high, we never confirmed any candle on the 4 hour time frame at least below this golden pocket area. Now it's true, you had like a very deep wick inside of it. It was not an easy trade to take. But this here marks between this and the value area low, it marks that this is basically the current support line that we have. and we haven't broken through. We tried to, but we haven't broken through yet. Okay, so that's an important level to have in mind. I'm going to remove it for now because it has played already. It was touched, but this is how you basically mark them. Here you can take the top of our range and the next low, pivot low. You have one here that's a bit alone, to be honest. There's nothing really that is striking me as a confluence. You could say it's above those series of highs, but this would be more of a scalp trade for me than anything. Yeah.
You are on log, and that's important for the feed.
Does it change? Is there such a big difference if we remove the log, you think, Pia? Okay, no. Yeah, okay. Well, you're right. Let's do it properly. So that's the Fibonacci retracement to the upside. Nothing, to be honest. Nothing that screams, okay, that's a good trade setup to have in mind.
Yeah.
Now, let's go a bit deeper inside this local price action. Do we have anything here that could interest us? So you have this. So see how we do it. You go from the bigger perspective, and then you slowly go more locally to understand what's happening at a more local time frame. So remember, we're inside of this range, okay? But inside of this range, you have multiple ranges as well. Look at that. You have one range here, okay? And then you had a range here. You see them pretty well. A deviation from the range, you drop, and now we're ranging inside here. So even inside of the range, you have multiple ranges that you can trade as well. And so, since we know this, how about we just pull here, a fixed range pull right there, to see if we have any kind of confluence on a more local time frame. So we do. We have the weekly level here. We have the value area high of this range that started on the 16th of December. So it was more than 2 weeks ago, 3 weeks ago almost. Okay. We have the value area low of the range that's aligned with this daily level that's untapped. You have the point of control of the whole range that's aligned with the point of control of this little range. So it shows you that it's been updated here. Very important. For a while, the point of control in this range was above here. Actually, for the major time of this consolidation area, the point of control was here. As simple as that. I'm going to mark it just so we can see it. Yeah. So it shifted once we started ranging here and spending more times lower here. It shifted towards the lower price here. Okay. But before it was above. So it's important to have this point as well, because you see it's like it's not really a double distribution, but I mean in this range you do have like two distinctive levels of volume that are visible. Okay, here not really, here you have nothing, and here you have a level, and here you have a level. Okay, this one is marked because it's a point of control, but you should not forget about this one because it showed some kind of respect. Okay, it's mostly people here are trapped, and you have a confluence between the weekly level, the value area high of this range, and this volume level, this big volume level around here. So on a more day-to-day perspective, one could say that here you could have a very interesting short opportunity, because you have three major, or at least middle to high time frame levels. Okay, this value area high, I wouldn't say it's a high time frame, it's a 3 weeks range, it's a middle time frame thing. Okay, weekly level, it's a high time frame level, and this volume area is a high time frame also level. So you have at least 2 high time frame levels. Okay, you add to this the value area high. For me here you have a nice trade. You want to wait for the reaction, of course. You don't want to set orders right there, but here most probably I'm going to be interested in finding a nice short setup. Okay, keep in mind that you are seeing this. Those highs were not challenged, so we could do this, you know, and then up, challenge those highs, and then drop. This could completely happen, and you should be aware of this scenario. Okay, but yeah. Until this is shown to you by the charts, this is a nice confluence area where you can look for a short, or if you're long from here, take some profits. Here's if you haven't taken any profits below, here is a good sensible area to take some profits, in my opinion, personally. Okay. What do you think about this area, Pierre?
Those are the two levels that I was expecting.
This here?
The first short setup that you marked, and the second one was the grabbing of the liquidity up there.
Here, huh?
Yeah, this one, yeah.
This really strikes you, because we know that Bitcoin is attracted to that. I mean, if you will see that any big major moves, it's always accompanied by this kind of swing failure pattern. It's called a swing failure pattern, and you can see it a lot. I mean, look at this one here, right there. It's such a small swing failure, but look at that here. Okay, you come here below it, like you're talking about a matter of 0.01%, 0.9%, 0.1% move to the downside, and immediately after that, boom, you strike back up. This is what moves the market. This is what big players are looking for. They're looking for those liquidity areas. So once you know that the people that have money are seeing this and they're thinking, okay, here I can fill in some positions, you actually have exactly the same thing below, right? You can, in your mind, think, okay, so if I had the amount of money that they have, I would say that this right there is a liquidity area.
Grab.
Okay, a liquidity grab. Let's go with liquidity grab, sure. And you have exactly the same one to the low side. Up, you go here and you go here. Okay, and you know that at some point price is going to be attracted by those levels. Price is going to go either here. Now, maybe you're not going to drop afterwards. Maybe just price is going to go back up and up and up. But you can be sure that those lows or those highs are going to be challenged at some point. And this usually offers the nicest trades, in my opinion, because invalidation is very, very, very easy. Let me give you an example. Should you start... So I'm just going to go on the 15 minutes because it's going to be clear. Okay. So those are the highs. Yeah. Should you start moving up, you see the swift move to the upside and then down, down, down. You can either enter once you go back below those highs, you enter your short right there. Okay. You put your stop loss above the new wick. So it's a 1% invalidation. And you can actually hope to take this down either to those lows or at least the point of control right there, you know. And that's a 4% trade for a 1% risk. You have a 4.8 ratio, right? Very interesting trade. Should you go higher than this level, you get out of your trade, you lose 1%, but the invalidation is clear. If you go higher than this, two options. Either you have a swing failure of a swing failure. It also happens. It's a pattern that you should be aware of. Or we're just going to go higher where? At least to the value area high, right there, of this whole range. This could also be a scenario where you do this, you go here, and then you take people out again, and then you drop. But in my point of view, this could be a very interesting, easy invalidation setup, and the same one below. So that's a short setup, and the long setup would be basically the liquidity grab, ideally into this daily level that we talked about already earlier, right? And then why not? You take it to the highs. You take those lows, okay? You go below the value area low. You hit this daily level that was created. Here, 27th of November. You hit that, and then you go back up. So the same thing could happen, whether it's here or actually here, you know. And in that case. And in that case, what you want to do is, okay, adjust, of course, you put this below the wick that will form. We don't know where it's going to go, okay? I'm just showing you if price does that. And basically, those are your setups. Those are very easy setups with a very nice ratio. But again, you have to see the reaction. Meaning that if you see the price here, you don't short, you don't short, you don't short. Here, you're not shorting. Why would you short? You start shorting or thinking about shorting when you go below. This is the first sign for you that it's a swing failure pattern that's happening, okay? But even there, it's risky. Ideally, what you want to see is a change in market structure. You want to see probably maybe some trap traders above here. Trap traders, I mean longs, people who've been buying thinking that's a breakout, because those guys are most probably gonna get liquidated should this scenario happen, and the move is gonna be very strong. So you want to see some kind of a reaction. You can have multiple entries, a very aggressive entry or a more conservative one, but more or less this is what the trade should look like. You enter once you go below, stop loss above the wick, stop loss below the wick if it's a long, and that's it. And you just ride it. You take some profits along the way on sensitive key levels. Point of control is a nice one. The weekly level is a nice one. And yeah, very easy setups in my point of view. Probably the best ones because you're not trading with the mass of traders that are inside here. You know, the big volume where it's more of a gamble. Yeah, I mean, you see those wicks right there? Those wicks right there that you see? It's just to take out everybody because here you have no idea what's going to happen. And so you take out everybody from the long, you take out everybody from their shorts, and you stay inside. Here for me is the gamble zone. All this area right there is the gamble zone, okay? Once you hit this weekly level, this is where you have your first real resistance where you could scalp a short. And I would have my eyes on this because of the high time frame confluence. But the real golden setup for me, at least in this range, would be the short from here and the long from here. Should you see the reaction that you want to see.
Buy high, sell low.
Exactly. That's the best thing to do. Buy high, sell low. If you do this, we are going to be happy. Okay.
Yeah.
Okay, so that's like for a more local perspective. Now, do we have maybe more like swing trades that we could be looking for? In this section here, for me, you don't have any kind of swing trades. Okay. Let me just remove all that.
To me, that would be the extremity of the range, to be honest.
The extremity of the range?
Like either at the bottom
here or here.
Yeah, either at the bottom, yeah.
Yeah, it's the same analysis. It's just on a higher perspective, okay? Everybody in this range have been opening positions. And if you're short, many people have been putting their stop losses here. If you're long, stop losses here. So the same analysis that you did here, you can amplify it and think, okay, price is going to get drawn either to this level or to this level, or even both. We could go low and then high and take everybody out of their positions and stay range bound. But you need to be aware of those levels. As Pierre say, very good levels to have in mind, because those could be very cool trades. Value area of the current range. Sorry, I'm just
we did trade them.
We did. We traded this one.
Yeah.
Remember? You traded this one.
Yeah.
I did not. I took it a bit lower. I don't remember where. Probably here, I think. Yeah. I had my entry of a short here. You had it here. So you beat me on this one. We traded them and we're aware of them. Now we also know, and it's been for a while now, that there is here a naked monthly point of control. I think it's around 350, right?
Do you want the exact price?
If you have the value, because I won't be able to find it on the other software.
The naked monthly point of control of it was at 15,375.
15,375.
Yeah.
Okay, amazing. So we also know that we have another high time frame level here, a naked point of control. So remember, point of control, lots of transaction, very crowded area, people who got the move at the wrong time and the wrong direction. They are stuck there with their trade and they're just hoping for the price to come and visit it again. This is a naked monthly point of control of almost 3 years. So people have been in the red for a lot of time and they would love to see the price come back here so they can unload their short positions. When they shorted during a bull run, so that's not really good, but yeah. So they can unload their short position, and unloading a short means buying. So here you're going to have a buying pressure almost for sure. You add this to the fact that here there's a liquidity grab to take, okay? Here it almost looks like a double bottom, even though we did a mini SFP right there. Plus the daily level, you have yourself a very cool trade. So as a swing perspective, you have this trade, and this trade, we've been talking about it for so long now. It's the same one since November, okay? And you could actually maybe take it to the highs. And here you're talking about a 19% trade. Like in terms of high time frame levels, here you have a 19% trade that you could enter should you see like here a nice wick, and then here above, and then like this, something like that. Here for me you have an entry. Easy invalidation as usual, okay? Invalidation below the wick. It's a 3% stop loss, so you adjust your position size. Remember, risk management is very important, but you can make 19%. So it's a 6-to-1 ratio. It's amazing. It's amazing. For every dollar that you put in, you can make $6. It's really cool, right? So yeah, I would keep this in mind because this could be a very, very cool setup. And the opposite side, we know that there is this parallel channel. So, okay, for me, you have two ways of seeing it. Either this is the high, okay, and this is the low. The low for sure is here. Either this is the high of the channel that we're in, or this is the one, okay? Personally, I think the decision is going to be made regarding the mid-level, the mid-line. Yeah. I mean, both of them are interesting. Both of them are interesting. And honestly, both of them could give you trades. So here, you could have a swing failure pattern of this level, and you could also have a swing failure pattern of this level, which would be basically entering the previous range, okay? So here, I guess the charts will tell us where the price is going to stop. You just have to see the reaction. So basically, again, if you see some kind of a move like this, like that, change in the market structure, then you can short. But if you don't see that, if you see price just going back up, and then you find support here, this level becomes a support area, right? And you bounce off of it, it wouldn't be a good idea to short, and you can expect maybe higher towards this level, okay? So here, yeah, you need to be smart about it and think, okay, either the high of the channel is that one or it's this one. Personally, I would keep this one for now because it's the closest level, so I would keep it in mind. And if I see that this is claimed, I would turn my channel to this higher level at 18,727. Yeah. So
we just have backtested the middle of the channel, of this channel.
We just backtested the middle of the channel. Wait a second. Where is the back? You mean here?
Yeah.
Yeah. Yeah, you see the middle channel is really, really well respected. This is why I like this one a bit more. Support, resistance, resistance. We don't confirm any candle above it here, you know. Here, look at this.
Below it.
Yeah, look at this area of support, like just wicks, you know, and then you go below it, and then it becomes a resistance, and then back up, support. This mid channel is very, very well respected, which is why I really like this pull. Actually, to be honest, I think I prefer this one. So yeah, on a very local time frame, I mean a more tradable, actionable time frame, at least for next week, we know that we have a long setup here. I'm just going to remove this one. And a short setup here, okay? We know that there's also another short that you could be taking around this weekly area because of the high time frame levels that are piling up here. You have at least two, and you have the value area of this area. So you could have like one short, a second short. Of course, you have to take profits at sensible areas. So let's say you enter this short right there. What would be your next level of take profit? Well, if you're in the idea of taking it, yes, tell me, Pierre.
No, sorry. No.
If you're in the idea of taking this trade to a rotation towards the lows of the range, for me, you have one at the point of control. Okay. Oh wow, that's huge. Yeah. You have one take profit here, and you would have probably one take profit like around this area, or even if you're a bit more of a gambler, you can maybe say, okay, at those lows, because you're expecting those lows to be taken, so you can put it right there, okay? But you need to take profits, okay? The idea here is not to take the trade of your life, it's to pay yourself, okay? Same thing here. Should you enter there, now you could be a bit more on the safe side if you enter higher, and you could have, I would say, a first take profit at this area right there, okay? Why? Why this area? Well, because this is also something that might happen, is that you go above, you turn this resistance into a support, you go here higher, you break through this level, you break through the midline. So I mean, just it's a strong scenario, right? You take the highs, you drop. So here you're in a short, you're in a swing failure pattern of those levels. And what could happen is either we backtest the midline and we go up, or we backtest the value area high and the weekly, which is now a support, and you go up. So for me, depending on your risk profile, you can take a profit here or even higher just to make sure, okay? And even if this looks like a very low take profit area, it's a 0.8%. 0.8% a day, you're going to be rich very fast. Here, 1.3% for the weekly. It's even also, I mean, you could take two take profits, one here, to be honest. And then just ride it to the downside. Huh? But you need to pay yourself because you never know. Maybe this is not the swing failure pattern that we expect. This is not going to be a reversal and goes back up. So yeah, entering trades is good, but knowing where to take profits is as important, if not even more important. That would be for the short. Yeah, tell me.
I don't know why you don't have the same values, but I told you we just back tested the middle of the channel, and the middle of the channel was to the exact dollar 16778.
Yeah, because we're not. I know why. Because you're talking about the lower time frame channel, probably talking about this one, right?
No.
The big one.
No, the big one.
The one from beginning of
November. I don't know why. Yeah. I don't know why we. Oh, yeah, because this was the 1800 and 18,118.
I mean, look, yeah, because if I do
not this one.
Yeah.
I've posted it in the trading channel.
Okay. On Discord. So just so I understand, you have this channel with those same pivots?
No, this is the high pivot is not that one.
It's above?
It is the first one.
Here.
No, the first one.
Okay.
Yeah,
okay.
yeah.
Okay, that's the difference.
Sorry. This is why we had different values. Yeah.
Okay, so in your point of view, this one is a more sensible area.
We've just backtested it, and it has incredible reversal powers. You know.
I mean, here you had a bit of a, like we call it, a bit of.
And it was in at the same level of the naked monthly point of control.
Yeah. Yeah. We wanted to talk about this because it's actually pretty interesting.
Yeah.
So, why are we rejecting now locally? It's interesting to know why. What happened yesterday night? Okay. So let me just remove all that. I'm gonna remove fib levels. That. Let's clean up a bit everything. We're gonna hide the things here. Okay. So what did we have here? We actually had something called the naked monthly point of control. I'm going to show you what we're talking about. So here, in order to see this, usually you want, oh wow, 11 million shorts opened. Have you seen that?
Yep.
Right there.
Yeah.
15 minutes. That's a nice injection of volatility. Remember what I said earlier? I expect volatility between 1 and 4 p.m. At 5:45, you have this 22 million volume with 11 million shorts. It's interesting. I think I posted it here. It was my analysis of the day. Let me show you. The idea was my favorite tool that that was you posted it after. Here, I expect some injection of volatility between 1 p.m. 4 p.m. today. I set it at 10 and look at that. Look at this injection that happened. It happened at 5:45. So it's normal because it's the opening of the New York Stock Exchange. So probably you had a drop on the S&P, followed by a drop as well on Bitcoin, because people are trying to guess now what is going to be the reaction, what is going to be the direction of this year. So it started with a drop. Let's see now. The VWAP now is a resistance. We're going to see later on what happens. So anyway, back to what we were saying. We were talking about this naked monthly point of control. Let me show you very fast what we're talking about. We were talking about this level right there. Okay. It's funny, I have it here. Yeah. Because actually you have to play with this. So personally, yeah, I had it around this area. Let me go to 100 ticks. Yeah, that's what I had. Okay. So that was the previous month, the month of December. What we did is that we closed below this point of control of a whole month, and we opened the next month below it. So this is what you call a naked monthly point of control. Okay, and the value is written right there. I don't know if you can see it. It's 16,775. So this, we had it marked on our charts. Okay, what I usually do is just go back on the monthly level. Go here. It was the December 16,775. Let's put it here, and then we'll adjust it. And I mean, look at the respect of this technical tool. I mean, we hit it yesterday night. Okay. It's gonna be, you're gonna see, because it's going to be like a confluence of multiple technical tools, interesting technical tools. Okay. So at this moment in time, we are in this range. Yeah, that was yesterday. We're in this range. Let's just put a bar replay. Okay, we're here. And at this moment in time, what you have is, you know here that there is a naked monthly point of control. And you saw something that is interesting, is that you have one high here. You have a lower high here that was taken here. Okay, so you know there is liquidity at least locally above this naked monthly point of control. Here you were in December. Okay, so it was not hit, it was not even created at this level. Okay, to give you a bit more of understanding, so it's more understandable, we should put it actually here. Okay, because this is when it's created. It's created when this opens. So let's go back to our level. Okay, and this is how it looks like. Okay, so at this moment in time, yesterday, we are trading at, let's say, above the point of control and not really far away from this value area high. Okay, we know that there is a naked monthly point of control above us, and we saw this liquidity also above us. Okay, and there is another tool, a very interesting tool that you should be aware of, which is Fibonacci retracement. So let's just put it pivot high, pivot low, and then that. Okay. And what's super interesting is that the first time we arrived here, we front run this level, the 618. So you have this big confluence of Fibonacci golden pocket, naked monthly point of control, and liquidity. So what happens next? Very easy. You play around it, and you expect this level to be taken at some point. Here you have a range going on, going on, going on. Bam. Did you see the strength of it? It's very fast. I mean, even on the 5 minutes, this is a very, very fast move. If you come here, it's like, I'm gonna go on the 3 minutes even. I just want to see how fast it goes. Okay. Bam. You see that? Do you see this move? You see how fast you have to be? In less than 3 minutes, people get out of their positions. People who don't know that there's a level above here. People who don't know that this is a swing failure pattern that is most probably going to happen, and that there's this golden pocket, well, they're not prepared. Whereas when you know this, you know that you have a very, very easy trade that you can activate. When you go above it and then right after here, below it, okay, if you're fast enough, you could have it around this area. You put your stop loss here, just above the wick, okay? And depending on your entry, because of course you have to be very fast, let's say you enter at the loss of the 618, you could be positioned in this trade and just see how it goes after that. See this amazing trade. See how the swing failure patterns are like the big, for me at least, the biggest value to risk or risk reward trades. You had a 0.7% trade for 0.19% risk. Okay, and here where would we did we bounce off? It was the value area, the VWAP once, and then the next day opened. And the VWAP provided some support, and then went back up. Here was also the previous day value area low, but I'm not going to go that deeper, okay? So this is what happened basically. Basically, yesterday we hit the naked monthly point of control, the 61866 area. Now we're seeing like a move back up to this area. I mean, this was this morning actually. Let's go a bit faster. Where you can see clearly that there's a range, okay? And the range is defined by lows, highs, okay? And those are the areas where you're gonna get involved. Inside, it's more of a gamble. You see how much of a gamble it is? Here, look at that. See, you come around this area, and those are probably the best areas where you wanna enter trades. Now, this could drop even further. And to be honest, I wouldn't enter now along, seeing that you have 11 million shorts that opened. But I mean, this is how the market reacts. The market reacts to liquidity. It goes to where there's money. And yesterday you had this proof basically. And today you have another one actually, because here you had the double bottom. We took everything out, and now look, we're already above it. We're above this level. We took all this liquidity. This is more of a failed auction than a swing failure pattern, because you have a first wick, you have a second wick. This is what we talk about. Swing failure of swing failure. If you put your stop loss here, you get out again. So you got to be aware of this pattern. If you're strong enough, you enter back in your short here, and you would already be in I think 0.4 or 0.5, yeah, 0.3% trade right now. I mean, yeah, once you know this, you can be prepared, and you know what to expect. Okay. Is there something else, other tools that we want to cover, Pierre, or no? Because the problem,
what could we do?
is that the stream it can last for 2 more hours, because we didn't even go into the high time frame, higher and below. So what we're probably going to do is a second one where we only focus on the high time frame. What I wanted now was really to focus on the range, so that you can see what is going to happen in the week to come. And should the levels that we talked about, just so you can remember, we're talking about the weekly here, swing failure pattern of the highs, swing failure pattern of the lows. Okay, so short 16,800, that's a good area. Short 17-ish, 1750 if you see a swing failure pattern. Long at 16,200, between 16,200 and 16,260 if you see a swing failure pattern. And for me, those are probably going to be the best trades of the week if we get them. Everything in between is more of a scalping territory, and it's going to be like really take profits really fast. And if you see like a weakness, you have order flow that helps you or anything. Other than that, I would keep it very simple. Liquidity grabs, the weekly for multiple high time frame levels, and that's it. Just wait to see how the week unfolds. It's going to be interesting. This week is going to be very, very interesting, especially seeing how the ES is going to react. I want to see if the stock market is going to have a bounce, or if the stock market is just going to keep dropping and dropping. Do you think we have time to go on the stock market, or should we stop it for now?
It really depends on you. I don't care, but
what time is it?
Maybe for the clarity of it, we just stay that way for today, and
Yeah.
we do another one in a week.
Yeah, I agree with you. I think it's better as well. Let's keep it simple.
Yeah.
We showed you some levels. Honestly, it can go really, really deeper. You have many, many other levels to use, many other technical tools. Soon enough, what we're planning with Pierre is to do more of an educational content. So instead of just showing you the tools that we use, we're going to try to teach them to you, show you multiple examples, how to map a daily level, a weekly level, naked monthly point of controls, or any kind of that, and any kind of technical tools that we use, so that you can do your own strategy or use a strategy that we use, because we've seen it multiple times now. It's working really well. So we have this going on. Personally, I'm working on some back testing statistics for technical tools. I want to go have a deep dive on all the tools that we use and maybe new tools to see if we can get new strategies. And we're going to increase the number of streams, probably. We're going to be present more than ever this year, Pierre and I. This is like a focus that we're going to have.
Definitely, yeah.
And you're going to see every day on Discord, we're here talking about the price action. If there is something notable, we will talk about it. If not, it just means that nothing has changed. Right now, we told you everything that we're expecting. Everything in between, it's even scalping or more of a risky business, in my opinion. So yeah, feel free to interact with us, ask us any kind of questions. We're available. And trade safe. Make sure that you don't use more than you can. And we'll see you next week. Okay?
Bye-bye, guys.
See you guys.
Bye.
Bye-bye.